Hey, Lynette here. Welcome back to my Accounting 1120 continuing discussion on partnership accounting. Wahoo! My goal today is to explore with you some methods for splitting up partnership income. But first, a little note. You can split up net income any way that you want, any way that is stipulated in the partnership agreement. You can reward partners for their time and effort, and this is called a salary allowance. You can provide them a return on their invested capital balance, like 10%. This could be an interest allowance. But you cannot pay partners as salary or interest and deduct it as salary expense and interest expense. Similar to what happens in a sole proprietor, that can't happen. Remember, our goal is to split up net income, even though we might be trying to accomplish some of those things. The partnership agreement is where you look to find how you're going to split up income. And the partnership agreement is usually pretty specific on how this is going to happen. Generally, there are three ways that you can split income. First is using a stated ratio. If you have two partners, you might say you're going to split income 50-50. If you have three partners, you might state it as like 4-3-3. 10 parts, 4 plus 3 plus 3. First partner gets 4/10 or 40%, and the next two get 3 or 30%. Well, one way to do it is based on a ratio like that. A second way might be based on their capital balances. Let's say you say, I'm going to give you 10% reward for having capital invested in it. So I'll take your beginning capital account balance and allocate 10% of net income towards you for that. That would be like an interest allowance. A third way might be based on how much service they provide, a salary allowance. In other words, a salary allotment. We're going to reward you for how much time you put into the partnership. And in fact, partnership agreements often use two or more of the above together. So they often use a combination of the above. So let's get some facts down and we'll try splitting some net income based on these facts. We'll have these facts carry throughout the problem. Let's assume our net income for the year is $75,000 and that we've made some of our closing entries and that I'm looking at the balance in the income summary account, and I've already closed revenue into income summary, and I've already closed expenses into income summary. So sitting in this account is $75,000 that I need to split between three partners. Let's assume that the balance sheet for the partnership shows that I have three partners, capital account for partner A, capital account for partner B, and one for C. And the balance, just before I close net income, and my first partner, or capital, my partner A, is $100,000, and my second partner, partner B, aren't I imaginative of my names today, is $150,000, and my third partner isn't quite as heavily invested. They have $90,000, so the total partner's equity on my balance sheet is $340,000. So let's carry these facts forward. We have net income in the amount of $75,000, and our balance sheet shows equity for capital partner A, $100,000, partner B, $150,000, and C for $90,000. So let's move forward with these facts and build some partnership agreements that split net income using different circumstances. In my first example, example 1, my partners split that $75,000 of net income on a ratio of 4-3-3 respectively, meaning partner A gets 4/10, partner B gets 3/10, and partner C gets 3/10. I'm going to use a worksheet that I like to split partnership income with throughout all my examples. I'm going to list my partners. I have partner A, partner B, partner C, And then I have total income that I want to split. And my total income is going to be $75,000. In my first example, I said we're doing it 4 to 3 to 3. 4 plus 3 plus 3 equals 10, so partner A will get 4/10, B will get 3/10, and C will get 3/10. 4/10 of $75,000 going to partner A will split the first $30,000 of income to partner A. And that is 75,000 times 4/10. 75,000 times 3/10 will go to partner B and C. So take 75,000 and times it by 3 and divide by 10, and you'll see they each get 22,500. When you add the 30 plus the 22,500 and another 22,500, you will have allocated 100% of the net income, so we're through. This is one level of income splitting on this partnership. And it would lead to the following entry to close income summary. Remember, it had a credit balance, so we'll debit income summary to close it out, and the amount is $75,000. And we'll give some to capital partner A. They'll get $30,000 based on our split. And the capital account for partner B will get 22,500. And the capital account for partner C, another 22,500. And in this example, on our one-level income split, we split income based on a ratio, 4 to 3 to 3. Not bad, huh? My next example, I would like to do example 2, a two-level split. My first level is I want to give the partners a 10% return on their investment in the partnership, so a 10% return on their beginning capital balances from the balance sheet. And then I want to split it on whatever is left on a ratio of 4 to 3 to 3. Again, respectively to each partner. I'm going to build that worksheet again. I have partner A, partner B, partner C, and I have $75,000 total net income that I would like to split between them. Now, as you'll recall, the first thing we said we were going to do is a 10% return. So let's get 10% to each partner. As you'll recall, partner A had a $100,000 balance in their capital account. Let's just quickly go back and look. $100,000 for capital A, $150 for B, $90 for C. So those are our numbers. So 10% of $100,000 for partner A will be $10,000. 10% of $150 for partner B will be $15,000. And 10% of $90,000 for partner C will be $9,000. So I have split the first level. 10 plus 15 is 25, and another 9 is 34. So I have used up $34,000 of my net income in that first tier, and I have 41 left to go. 75,000 minus 34 is 41,000. The second thing I wanted to do was the ratio, 4 to 3 to 3. So 40% or 4/10, because that equals 10, will go to partner A, and they'll get 16,400. And again, that's 41,000 times 4 divided by 10, or 40%. Partner B and C each get 3, or 30%. And if you figure that out, that's 30% of 41,000 is 12,300 each. If you add up the 16,004, 12,300, and 12,300, you will see I have allocated 41,000 out. So I've finished allocating my income. Partner A is going to get 26,400. partner B is going to get $27,300, and partner C is going to get $21,300. And this rewards them for the balance they have invested in the partnership at 10% and the interest allotment or allowance, and then splits the balance on a ratio. The entry to close this net income would be debit income salary, because remember we have $75,000 in that account we need to get rid of. And we're going to put into capital account for partner A $26,400 based on our worksheet, and capital account partner B $27,300, and capital partner C $21,300. And even though we gave them a return of interest on their beginning capital accounts, you can see there is no interest income or interest expense in our entry. We're simply divvying up income. That's pretty cool, isn't it?